What's going on, guys? So this is a trade review for one of my trades I took today. As I mentioned, I'll be occasionally posting some trade reviews of the trades that I take. If you're part of my Discord group, you usually see the screenshot in there. We're pretty active. We're talking about trades, trading setups, all sorts of traders in there. But it's actually there's becoming a lot of ICT traders in there. And that's what I'm trading is ICT. I do not teach ICT as I'm still learning myself. 6 months in, and I don't ever plan on teaching ICT trading because he has it all on his YouTube channel for free. So you can go there to learn. I am just kind of going over the things that I learn, what I see. And as I mentioned, I'm still always learning. So and I recommend, there are some people that teach ICT strategies out there. I personally only like to learn from what ICT is teaching himself. I don't like watered down things. I just want to go straight from the source. So I do want to review this trade because this was a beautiful trade. This is April 16th. I do the 2022 model is what I primarily focus on. And there was a reason. One of the main reasons I want to do this trade review today is because there was a reason not to take an entry. There was technically, it wasn't a. If you don't know all the rules, you do need to go watch the videos. But there was an area that could be confused as an entry, and I want to go over that. But really, I want to show you all what my mind frame was, my mindset was for this trade, and what I was looking for, and what really made me take it. So, currently, this is. I do the top-down analysis, right? So over the last few days, if I go to the daily chart here, I have been short biased for quite a while. Okay, and the reason is because if I look at the daily chart here, we had these levels. We had a lot of liquidity building up under these levels here on the daily chart, right? So the daily chart, and I've been eyeing these levels, and then what was it? Friday, we busted through that, or Monday, actually. I'm sorry. Yeah, Monday. Whatever that day was that we went. Oh, it's Monday. That's right. Because I didn't take a trade Monday. I saw my entry on 4:15, and I missed it. It missed it. Oh my God, I missed my short, and it ran through, and it finally ran through all these levels that I was looking at for my short bias, and I missed it. I just had to watch it run away. I'm not going to chase a trade. Didn't take a trade yesterday, but it ran through all those levels, right? So you can see here on the daily chart, it ran through. So I had these levels marked out for a while. Since it ran through, I'm still short biased. And because we have down here this fair value gap, and we have this swing down here, okay, that I was looking at, this swing. But I noticed it would be in the morning, this fair value gap wasn't there yet. Okay, it wasn't there yet. So since we ran through, that was also last week's low. So what I was looking at this morning is that there's a potential it could run up and try to kind of fill this imbalance here. But if it doesn't for the day, then it would close, create a fair value gap, and then over the next day or two, I would look for price to come in and start to rebalance this. So I'd start looking long, and then looking for it to go short down to these areas here. Okay, that's just my bigger picture analysis. But then on the 1 hour chart here, got this huge gap here, this huge fair value gap. Okay, there was no opening range gap in the morning. 15-minute chart. See the gap down as well. So what we're looking at today, back here, is we had these equal highs. This was pretty straightforward. We had these equal highs up here. See the opening 10 a.m. here, this big green bar. We had equal highs up here. So that was my buy side liquidity. Equal lows, relatively equal lows out down here. So this was going to be my sell side liquidity here, right? So I'm looking to see if it's going to sweep the top, the buy side liquidity. And because we have this huge fair value gap coming down on the 15-minute, 1 hour and 4 hour chart, it was all there. It was a big gap. So we know price could want to come in and fill that imbalance, or at least half of it. So that's why before I'm expecting short, but before going short, I was expecting price could run up in here. So whenever I came down to my 1 minute, so I look at the 1, 2, 3, 4, and 5 minute to execute my trades. Okay, so this is what the 5 minute chart looked like. It looked kind of messy here. Again, I'm looking to take my trading between 10 and 11 a.m. and that's it. So it came down. Here was from 6 a.m. There was a big gap, liquidity void. Came down into it, right? And here's the London low. So I figured at this point, we may look to run up and take buy side liquidity, and it may continue higher to where I mentioned that gap to fill that void up here, to fill part of it, right? Or at least half of it. So let me go back down into my 1 minute here, because this is where I executed my trade today, was on the 1 minute. Let's go back here and I'll show you. So price ran down. Okay, as it ran down here, we had our open. So then it started going up. This was at 9:47. It came down here. And it went inside this liquidity void here, because we had a void coming up. That was also London low. It wasn't quite the sell side liquidity yet, but it was this area that I liked. We had yesterday's low here. So what I was looking at when price came up, are we going to have displacement and a fair value gap to go ahead and run out to buy side? Because before going short, right, if it is going to go short all the way down to those levels, we need to run out buy side and or fill some of that imbalance up there. So I'm expecting price. So that's the keys. You got to expect, you got to know where to expect price to go, and then you can know how to trade it. So I'm expecting price to run up here anyways. So if I get an entry to go up there, that's what I'm looking for. Okay. And if I don't get an entry, then I'm not going to chase. I'm not going to take anything, even though my full expectation is for it to run up in this area. I'm not going to take a trade anywhere below it, or, above. So let me measure this. Let me show you. If I measure the halfway point of this whole move, it's right here. This is equilibrium, this blue line. So I really don't want to take a trade anywhere above that to go long, because you want to go from discount to premium. Okay, so I was looking and price left this fair value gap and it came up. So we had this little swing right here. Okay, so we had, that was a little swing and price broke through it, left this gap. So I was looking at this gap here, potentially, if price came down to it, to take my long from here, about 852, right up to buy side liquidity, which would have been 918 or so. I mean, that would have been a beautiful, what? That's almost 70 points, 60 something points. That'd have been a beautiful trade. However, that didn't happen. So I got to follow my rule. I got to follow the rules, right? Didn't happen. See, it came up. Here's the swing. And look at all these wicks. It respected this swing so much. Okay. And then it came up higher, ran up, it left a gap right here. So I was looking to see if this gap is going to hold. And then it ended up creating an order block in here. So I pulled down here. Technically, it didn't run up to the buy side liquidity yet. So technically you could enter in here have your stop right under these lows and take it right up here. That's not what I'm doing. That's not the trade I'm looking for. So I didn't take it. Okay. I didn't take it. So I ran up. And then now, as it takes out buy side liquidity, my thought process is it could run up to where I mentioned, okay, to fill right up in here where I said we have the last week's low. This was the old long-term low, got taken, and I'm going to remove that off my chart now. But it could run up in this area, right? So I'm not looking for a short until one of two things happens. It either runs up into this area, or if it gives me clear displacement with a reason to go short. Okay, so now we're going to look. So it ran up, and this is a clean sweep of buy side liquidity because it ran up. It didn't spend no time above buy side liquidity. It ran up and immediately came down. And look what it did. I'm going to get rid of this order block real quick. Look what it did. I'm going to get rid of this one so I can show you. It created a fair value gap right here. This is not an entry because, yes, it came down quite a bit, but there's no swing. There's no low, short-term low, or anything is taken out. This is just a big pullback here. And yes, it left a gap, but I didn't take it because it didn't take out any of these lows to give me a market structure shift. Because of that, I anticipated price could keep running up. I don't want to take this. Okay, and you can see it wicked all the way back up here. So if I got in here at 850 or 905, I would have been 30 points in the negative. I would have taken 30 points of heat on this. And technically, your stop should be up here above these highs. So we're looking at 30. What's that? 905. Or that's like 20. So we're looking at like 25 points of a stop. That's not bad. That's actually my max amount that I'm willing to risk on my contract sizing. If I have to risk more than that, if the trade requires me to risk more than 25 points, I size down a contract. But yeah, I wasn't, and because that's not technically a valid setup, it didn't take out any lows. I don't want it. But look what happened when it pulled back into this gap. I'm gonna remove it now, so it cleans it up. It created this swing here, right? It's okay. You see that it created this swing. Now I do prefer this to run up and take out this high, and then come back and take out this low, leaving a fair value gap. But I don't have to have it because watch this. Because this ran up into this gap and came back down, now we have an order block here. Okay, we have an order block. These two bars up, that's a bearish order block. And along with that, we have this fair value gap. Bearish fair value gap. So not only do we have a fair value gap, we have three levels of defense here. We have a fair value gap, bearish. We have an order block, bearish, and we have this swing right here, this market structure shift. So that I have three levels of defense. If I have my stop right up here, really it could even be up here, but you got to give it some room in case if it wicks, right? Because you can fully expect and anticipate it to trade anywhere in this area, and that's okay. You just don't want to see it close above these. If it closes up here above it, it's probably not going to work out, but then you just have your stop at this high just in case. Okay? So it came down, it took out this swing, and before it came back up here, look what happened. It created it there. It came down, and it took out all these little lows here. All these lows right here took it out. Then it came back. I entered right here. Stop loss up here. And my target was right here at the top of this fair value gap because it never came back and hit it. And technically, I fully anticipated price to come back right here. And so I could have had my target there, but I like to go for the low hanging fruit right now because I'm still learning too. So I had every belief in me that price is going to come back through this fair value gap right here. And sure enough, I mean, it did a little bit of wicking, but I mean, as long as you rely on this system, you have faith in it, you have your stop where it's supposed to be, and you have great money management, you let it ride. When it comes down in this area and it's doing this here, you can come down and move to break even. Or you could tighten up to reduce your risk because it should not trade back up in here. You know, many options. It inverted this gap right here. So really it shouldn't trade above that for a while. So that turns into inverted fair value gap. So you could put your stop down here. You know, many places. You can manage it how you want. But then, bam, went right to the target. But I really specifically, like I said, wanted to show this trade because there was a reason not to take a lot. If you're not too familiar, this could have tricked you into taking this entry on this fair value gap that I mentioned right here. And it still would have won. It still would have won. But the thing is that's not always going to be the case. And let's say you had your stop like up here above the gap, right? Just like a little bit above it. It would have taken you out. And you would have had to deal with the heat. You see, where I got in my trade, I took no heat at all. And that's the best way, right? I mean, I took a little bit of heat. I got in pretty much right here, like 893-ish, 893.25. I was like right in this area. So 893.25, it went up to... So I took about 4 points of heat. I'm not worried about that at all. And then the whole rest of the time during all this chop and all this, I was just sitting in profit, just perfectly happy. So that's all. I wanted to go over this trade. I hope it helps somebody. And I will be doing more of these. And I actually haven't had a loss in a while. So April is shaping out to be very good. When I do have a really good loss, I'll show that one too. I'll post a review of it. So, all right, everybody have a great day, great evening, whenever it is that you're watching this. And as always, trade well. I'll talk to you later.